right, we got earnings to talk about right now. Bank earnings in focus this morning. JPMorgan Chase just reporting third quarter results. It was a beat on both the bottom and the top line. Earnings of $1.76 a share, beat the estimate of $1.65. Revenue of $26.2 billion, beat the estimate of $25.2 billion. Joining us now to break it all down, global economics editor with the Wall Street Journal, John Hilsenrath, joining the conversation. John, good to see you.
Hey, Maria.
Your
how you doing?
reaction to the results?
Well, I think these JPMorgan numbers are really strong. You know, the 176 also beat a year ago of 158, so that's an 11% increase in earnings per share over a year. The expectation on Wall Street was a 4% increase. So this is a solid beat, and I think it starts the market off on a really good note today.
Yeah, but look at fixed income revenue. Look at markets revenue down 22%. I mean, these are huge numbers in terms of trading revenue. I know that Jamie Dimon on the call is saying that higher interest rates and higher loan growth offset a decline in trading revenue, but trading revenue has been under a rock now for several quarters.
Right, but you know, from the perspective of the economy and how Americans are doing, I'd rather see banks earning money because they're putting out loans to households and businesses than doing a lot of trading that only benefits Wall Street.
That's
you know,
true.
the markets have been calm, you know, very, very predictable, and so they're not seeing a lot of trading revenue. You know, so what if these guys aren't bringing home a lot of money for trading? If you're getting loans into small businesses and households, then that's great for the economy. I think these are solid numbers.
Lindsay.
So, John, what do you think he's going to say about that as far as 2018 goes and his outlook for the economy and loan growth and things like that going forward?
Well, you know, I think what this says is that the economy is on an upswing right now. And I think we'll see evidence of that. You know, so they get a little bit better on net interest margins because the Fed has been gradually raising interest rates. That helps them. But I think what this means is that loan volume is up, and that's really good news.
Well, so how much of the tax reform policies have been priced into the banks? We've seen the entire group run up in 30 days very significantly, especially the regional banks. How much is priced in from tax policy perspective as well as deregulation? Because you've got the new Fed chair of financial oversight there, Charles Quarles.
Well, you know, so I think I mean, you mentioned the bank stocks being on a tear for the last 30 days. I think that's true, and that's really important. Again, it's a sign of strength in the underlying economy and an expectation that something is going to get done on the tax front. You know, I think there was a burst in bank stocks after the president was elected, and then they kind of plateaued for a while because people were saying, is this tax deal ever going to happen? Now I think what you're seeing is a little bit more optimism as Congress is really getting down to the hard work of writing a bill.
Yeah, you're right.
You know, I think
right.
I think they're pricing something in. You know, I think the market is correctly seeing that the Republicans, they have to get something done. After failing on health care, they have to get something done.
Right.
I don't know if it's going to be everything the president wanted, but it's going to be something.
Yeah, Dagan, this stock is up 38% since Election Day, Dagan, JPM.
Right. Again, as Lindsay was pointing out, it's up 10% in the last month after some weakness earlier this year. Dimon says in his comments that the global economy continues to do well and the U.S. consumer remains healthy with solid wage growth. So this is something that John has talked about often on this program. It's really the global economy with all of these developed economies growing in sync for the first time in a decade. And then also what we were talking about is the wage growth of 2.9% that we got in the most recent employment report, which is a very good number, getting close to kind of that all-important 3% mark.
Yeah.
So we've been seeing. Sorry, John.
Go ahead. I don't want to interrupt.
Well, I mean, I think it is encouraging because we've seen the small businesses. They've gotten very optimistic about Trump.
Yeah.
Their expectations are good, but they've still been reluctant in this era to borrow. They're not. They're concerned that they're going to have the higher revenue to justify new investment. So let's hope, you know, as John referred to, that this is a sign that small businesses, they're not just confident and optimistic. They're actually making those investments, borrowing the money to expand their plant and equipment.
I want to talk more about that. We're going to talk with Linda McMahon coming up in the program, the administrator for small business. She's going to come up in the next hour to tell us really exactly what small business is doing. And the president talked about it last night, John. He spoke in Middleton, Pennsylvania, to really push his reform package and is saying that it's going to lead to jobs. Watch this, John.
The biggest winners from this transformation will be everyday families from all backgrounds, from all walks of life, and our great companies, which will produce the jobs. We'll be bringing back probably very close to 100% of the money back into our country where it can be put to work and jobs will be created. Made in America. Remember the expression? Made in the USA, made in America. You don't hear that so much, but you're now starting to hear it again.
The president also revealed that the average U.S. household could save $4,000 on their taxes under this reform. John, do you expect to see bipartisan support behind this plan? And what's your take on that $4,000 number?
Well, the answer to your first question is no. I don't expect to see bipartisan support. You know, I think that the Democrats are going to have a very hard time getting behind a plan where, for instance, they're talking about repealing the estate tax, which accrues mostly to wealthy households. The Democrats have drawn a line in the sand. They said, you know, they're not going to accept, you know, any kind of tax cuts for higher income households. So I think this is a Republican plan, and they've got to make it happen. In terms of the 4,000 tax cut, we still need to see the details of how this thing gets written. You know, there's a lot of moving parts in it. They want to get rid of the personal exemption and increase the child tax credit. They want to get rid of state and local taxes, but they might keep deductions, but they might keep property tax deductions. It's going to mean different things for different families based on where you live and what tax bracket you're in. Yeah. And you know, I think what we saw, there was a report out last week that this was going to raise after-tax income for higher income households a lot more than middle-class incomes. That's all premature. We really need to see the details before we make pronouncements like that.
Yeah, we don't have the brackets yet.